Hey everyone, and welcome back to the channel, your go-to source for understanding the mechanics behind some of the most intriguing movements in the market. Today, we're diving deep into a fascinating micro-cap stock that recently popped up on our hard-to-borrow screener, BJDX Inc., ticker symbol BJDX. We're going to break down what makes BJDX hard to borrow, explore the concept of a short squeeze, and discuss what factors you need to consider. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, let's talk about BJDX Inc., or BJDX. This company operates in the healthcare/medical devices sector, focusing on medical diagnostics. They're developing what they call the Symphony technology platform, which includes an analyzer and single-use protein detection cartridges designed to measure key diagnostic biomarkers in blood. It's a small company with a current market cap sitting at just $1.03 million. Should BJDX stock chart looking at its recent price action, BJDX has been quite volatile. Today, it surged an impressive plus 24.0%. Over the last 5 days, it's up a substantial plus 33.48%, but if we zoom out to the last 30 days, BJDX is actually down 58.53%. This recent bounce, however, is what makes it particularly interesting right now, especially when we look at the borrowing costs. What does cost to borrow and why it matters? Before we get into BJDX's specific numbers, let's quickly explain cost to borrow, or CTB. When an investor wants to short a stock, they first have to borrow shares from a broker. They then sell those borrowed shares, hoping the price will drop so they can buy them back at a lower price, return them to the lender, and pocket the difference. But borrowing shares isn't free. The broker charges a fee, the cost to borrow, which is typically expressed as an annualized percentage. Think of it like interest on a loan. When a stock is highly sought after by short sellers, or when there are very few shares available to lend, this fee can skyrocket. A high cost to borrow tells you that demand to short the stock is high, or supply of borrowable shares is extremely low, or both. It can even exceed 100%, meaning short sellers are paying more than the stock's value per year just to hold their short position. Why the stock is hard to borrow right now. Now let's look at why BJDX appeared on our hard to borrow screener. For BJDX, the cost to borrow fee is an astonishing 745.4% annualized. Highlight 745.4% CTB. That is an extremely high fee, putting significant pressure on anyone shorting this stock. Why so high? Well, BJDX has an estimated float of just 0.9 million shares. A small float means there are very few shares circulating in the open market, making it harder and more expensive for short sellers to find shares to borrow. While the exact number of shares currently available to borrow is unknown, this tiny float, coupled with the exorbitant fee, tells us a lot. Today's volume for BJDX clocked in at an astonishing 90,083,000 shares, which is nearly 9.5 times its 30-day average volume of 9,440,246 shares. This sudden surge in volume and price action, combined with the high CTB, hints at significant activity. Our internal composite squeeze score for BJDX, which combines factors like CTB, float size, and momentum, sits at 40.5. This isn't the highest score we see, but it's certainly enough to flag BJDX as an interesting situation. Squeeze mechanics explained. So, what does all this mean in the context of a potential short squeeze? A short squeeze occurs when a stock's price rises sharply, forcing short sellers to buy back shares to close their positions. This forced buying creates even more upward price pressure, trapping more shorts and creating a feedback loop. When a stock like BJDX has a cost to borrow of 745.4%, short sellers are incurring massive daily costs. If the stock price starts to move against them, as it has today with that plus 24.0% gain, the financial pain intensifies. The combination of high borrowing costs and rise in prices can trigger margin calls, forcing shorts to buy back shares at higher prices to prevent further losses. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the stock's price will ultimately fall, and they are willing to pay a premium to maintain their bearish bet. Dilution risk check. One critical factor to consider when evaluating any potential short squeeze candidate is dilution risk. Dilution happens when a company issues new shares, increasing the total number of shares outstanding. Even if a stock has a high cost to borrow, a significant new share issuance can flood the market with supply, making it easier for shorts to cover and potentially negating any squeeze potential. For BJDX, we've checked recent SEC filings and found no recent dilutive SEC filings such as -1s, -3s, or 424 BS in the last 90 days. We also found no recent reverse splits for BJDX in the look-back window. This means that, currently, new shares aren't actively being injected into the market by the company, which could otherwise counteract the limited supply indicated by the small float. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For BJDX, given its current setup, here's what to watch for. Continue monitoring the cost to borrow fee. Any further increases would intensify pressure on shorts. Keep an eye on the availability of shares to borrow. If that number dwindles further, it makes covering even harder. Pay attention to volume. Today's 9.5x average volume is notable. Sustained high volume could indicate continued interest or a potential short covering rally. And of course, price action itself. A stock showing increasing strength despite high borrowing costs could be indicating an underlying shift. Remember, while BJDX's composite squeeze score of 40.5 is moderate, these types of setups in micro-cap stocks can be highly dynamic. BJDX Inc. BJDX presents an interesting case study with its medical device focus, tiny $1.03 million market cap, and that eye-watering 745.4% annualized cost to borrow. Its small 0.9 million share float and today's explosive volume certainly make it a stock worth watching from an educational perspective for anyone interested in hard-to-borrow dynamics. It's a prime example of how supply, demand, and borrowing costs can create intense pressure in the market. If you found this breakdown of BJDX and short squeeze mechanics helpful, please hit that like button, subscribe for more in-depth financial education, and let us know in the comments what stocks you'd like us to analyze next. Until then, stay safe and always trade wisely.